Question 1. Process analysis reveals that a junior engineer at Iveco Group has identified a potential safety concern with a new vehicle component during pre-production testing. While the issue is not currently causing immediate failure, the engineer believes it could lead to a safety hazard under specific operating conditions. The engineer is aware that reporting this could delay the production schedule, potentially impacting quarterly sales targets for Iveco Group. What is the most ethically and regulatorily sound course of action for the engineer? Option A. Wait until after the current sales targets are met to report the potential safety concern, to avoid jeopardizing the company's financial performance. Option B. Immediately report the potential safety concern through the established internal channels for product safety and quality assurance, regardless of the impact on the production schedule. Option C. Discuss the potential safety concern informally with a few trusted colleagues to gauge their opinions before deciding whether to report it formally. Option D. Downplay the significance of the potential safety concern to avoid disrupting the production schedule and hope that it does not manifest as a problem in the field. The correct answer is B. Immediately report the potential safety concern through the established internal channels for product safety and quality assurance, regardless of the impact on the production schedule. Explanation. Scenario analysis. This scenario presents a professional challenge because it involves a potential conflict between a company's immediate financial interests and its ethical obligations regarding product safety and regulatory compliance. The pressure to meet sales targets can create an environment where overlooking or downplaying safety concerns might seem expedient, but doing so carries significant legal, reputational, and ethical risks for Iveco Group. Careful judgment is required to prioritize long-term integrity and public safety over short-term gains. Correct approach analysis. The correct approach involves immediately escalating the identified safety concern through established internal reporting channels, such as the compliance department or a designated safety officer. This aligns with the ethical principle of acting with integrity and upholding professional standards. From a regulatory perspective, it is crucial to adhere to the Iveco Group's internal policies and any applicable industry regulations that mandate reporting of potential product defects or safety issues. This proactive disclosure ensures that the company can investigate the issue thoroughly, take corrective action, and fulfill its legal obligations to regulators and consumers, thereby mitigating potential harm and legal repercussions. Incorrect approach is analysis. One incorrect approach is to dismiss the concern as minor or unverified, hoping it will resolve itself or not be discovered. This fails to uphold the ethical duty of care and potentially violates regulatory requirements that mandate reporting of known or suspected safety defects. Such an action could lead to severe consequences if the issue causes harm, including significant fines, product recalls, and damage to Iveco Group's reputation. Another incorrect approach is to delay reporting until after the sales targets are met. This prioritizes commercial objectives over safety and compliance, which is ethically unsound and likely breaches regulatory frameworks that require prompt notification of safety issues. This delay could exacerbate any potential harm and increase the severity of regulatory penalties. A third incorrect approach is to discuss the concern informally with colleagues without formal reporting. While seemingly less confrontational, this bypasses official channels designed for proper investigation and resolution. It does not guarantee that the issue will be addressed by those with the authority to act, and it leaves Iveco Group vulnerable to accusations of a lack of due diligence and transparency if the issue later comes to light. Professional reasoning. Professionals at Iveco Group should adopt a decision-making framework that prioritizes ethical conduct and regulatory compliance. This involves 1. Recognizing and acknowledging potential ethical or regulatory conflicts. 2. Understanding the company's internal policies and relevant external regulations. 3. Utilizing established reporting mechanisms to escalate concerns promptly and transparently. 4. Documenting all actions taken. 5. Seeking guidance from compliance or legal departments when unsure. This systematic approach ensures that decisions are made responsibly, protecting both the company and the public. Question 2. Process analysis reveals that a newly manufactured Iveco vehicle model has a potential defect that could, under specific operating conditions, compromise braking performance. While the likelihood of this occurring is statistically low, the potential consequence is severe. Sales teams are pushing to meet quarterly targets and are concerned that reporting this issue will lead to production halts and significant sales reductions. What is the most ethically and legally sound course of action for an Iveco Group employee to take? Option A. Advise the sales team to focus on meeting targets and suggest that the defect is a minor issue that can be addressed in future production runs, without immediate external reporting. Option B. Continue sales activities as normal while internally investigating the defect further to gather more conclusive evidence, without informing regulatory bodies until the investigation is complete. Option C. Inform only a select group of senior management about the potential defect, suggesting a quiet, internal fix that avoids public disclosure or regulatory involvement. Option D. Immediately report the potential defect to the relevant internal safety and compliance departments, and ensure it is escalated to the appropriate regulatory authorities as per established protocols, irrespective of the impact on sales targets. The correct answer is D. Immediately report the potential defect to the relevant internal safety and compliance departments, and ensure it is escalated to the appropriate regulatory authorities as per established protocols, irrespective of the impact on sales targets. Explanation. Scenario analysis. This scenario presents a professional challenge because it involves a conflict between a company's immediate financial interests and its ethical obligations regarding product safety and regulatory compliance. The pressure to meet sales targets can create an environment where ethical considerations might be sidelined, requiring a strong commitment to integrity and adherence to established guidelines. Careful judgment is required to navigate this situation, ensuring that short-term gains do not compromise long-term reputation and legal standing. Correct approach analysis. The correct approach involves prioritizing the reporting of the potential safety defect to the relevant regulatory bodies and internal stakeholders, even if it jeopardizes immediate sales targets. This aligns with the fundamental ethical principle of public safety and the legal requirement to disclose known product defects. In the context of the Iveco Group hiring assessment test, this would likely be guided by principles of corporate responsibility, product stewardship, and adherence to automotive safety regulations, e.g., those enforced by national road safety authorities. Prompt and transparent reporting demonstrates a commitment to ethical conduct and proactive risk management, which are crucial for maintaining trust with customers and regulators. Incorrect approach is analysis. An approach that involves delaying the reporting of the defect to gather more data or to explore less disruptive solutions without informing regulatory bodies first is ethically flawed. This could be interpreted as an attempt to conceal or downplay a safety issue, which violates the duty of care owed to the public, and could lead to severe legal penalties and reputational damage if the defect causes harm. It also undermines the principles of transparency and accountability. Another incorrect approach would be to prioritize sales targets and attempt to resolve the issue internally without any external reporting, especially if the defect poses a genuine safety risk. This demonstrates a disregard for regulatory obligations and public safety, prioritizing profit over ethical responsibility. Such an action could lead to significant fines, product recalls, and a loss of consumer confidence. Finally, an approach that involves selectively reporting the defect only to a limited group of stakeholders or in a way that minimizes its severity would also be ethically unacceptable. This lack of full transparency can be seen as manipulative and a breach of trust, potentially leading to further complications and legal repercussions. Professional reasoning. Professionals facing such dilemmas should follow a structured decision-making process. First, they must identify the core ethical and legal obligations. Second, they should consult relevant company policies and regulatory frameworks. Third, they should seek advice from legal counsel or compliance officers if unsure. The guiding principle should always be to act in a manner that upholds public safety, regulatory compliance, and the company's long-term ethical standing, even if it involves short-term financial or operational challenges. Question 3. Process analysis reveals that a junior sales representative at Iveco Group has identified a recurring issue with a specific component in a recently launched vehicle model, which they believe could potentially compromise safety under certain operating conditions. The sales representative is under significant pressure to meet quarterly sales targets and is hesitant to report this finding, fearing it might delay production or negatively impact sales figures. What is the most ethically and regulatorily sound course of action for the Iveco Group to take in this situation? Option A. Downplay the concern as a minor anomaly and continue with sales, only investigating if a significant number of customer complaints are received. Option B. Instruct the sales representative to address the issue directly with the affected customers on a case-by-case basis if it arises. Option C. Advise the sales representative to focus on meeting sales targets and to monitor the situation informally without formal reporting. Option D. Immediately escalate the reported concern to the relevant internal departments for thorough investigation and assessment, irrespective of sales targets. Correct answer is D. Immediately escalate the reported concern to the relevant internal departments for thorough investigation and assessment, irrespective of sales targets. Explanation. Scenario analysis. This scenario presents a professional challenge because it involves a potential conflict between a company's immediate financial interests and its ethical obligations regarding product safety and regulatory compliance. The pressure to meet sales targets can create an environment where overlooking or downplaying potential safety issues might seem expedient. However, a responsible approach requires prioritizing the integrity of the product and the safety of its users above short-term gains, necessitating careful judgment and adherence to established ethical and regulatory standards. Correct approach analysis. The correct approach involves immediately escalating the identified potential safety defect to the relevant internal departments, e.g., engineering, quality assurance, legal, and initiating a thorough investigation. This aligns with the principles of corporate responsibility and regulatory compliance. Specifically, under frameworks like those governing vehicle manufacturing and sales, there is a clear obligation to ensure products meet safety standards and to report any identified defects that could pose a risk to consumers. This proactive stance demonstrates a commitment to ethical conduct, consumer safety, and adherence to laws that mandate product safety and disclosure. Incorrect approaches analysis. One incorrect approach is to delay reporting the issue to focus on meeting sales targets. This fails to uphold the ethical duty of care towards customers and violates regulatory requirements that often mandate prompt reporting of safety concerns. Such a delay could lead to further distribution of a potentially unsafe product, increasing liability and reputational damage for Iveco Group. Another incorrect approach is to dismiss the concern as minor without proper investigation, based on anecdotal evidence or pressure from sales. This demonstrates a disregard for due diligence and a failure to adhere to established quality control and safety protocols. It bypasses the necessary steps to verify the existence and severity of a defect, potentially exposing consumers to risk and contravening regulatory expectations for rigorous product assessment. A third incorrect approach is to attempt to rectify the issue internally without involving the appropriate compliance and legal teams. While internal problem-solving is valuable, bypassing designated channels for safety-related matters can lead to inconsistent or inadequate solutions and may circumvent mandatory reporting obligations to regulatory bodies. This approach risks undermining the formal processes designed to ensure comprehensive and compliant resolution of safety issues. Professional reasoning. Professionals facing such dilemmas should follow a structured decision-making process. This involves 1. Identifying the ethical and regulatory implications of the situation. 2. Consulting relevant company policies and codes of conduct. 3. Escalating concerns through established reporting channels to the appropriate departments, e.g., compliance, legal, engineering. 4. Prioritizing safety and regulatory adherence over short-term commercial pressures. 5. Documenting all actions and communications. This systematic approach ensures that decisions are informed, ethical, and compliant with all applicable laws and guidelines. Question 4. Investigation of Iveco Group's proposed collaboration with a new technology partner, which requires the sharing of customer contact details and purchase history, necessitates a review of compliance with the specified jurisdiction's data protection regulations. Which of the following approaches best ensures Iveco Group adheres to its legal and ethical obligations? Option A. Proceed with sharing the data after obtaining a general consent from customers in the existing terms and conditions, assuming the technology partner will handle the data responsibly. Option B. Share only the minimum necessary data for the collaboration to function, without explicitly informing customers about the data sharing, as it is considered standard business practice. Option C. Conduct a Data Protection Impact Assessment (DPIA) to evaluate the risks to individuals' rights and freedoms, identify appropriate safeguards, and ensure a lawful basis for data sharing, such as explicit consent or legitimate interests, is established and documented. Option D. Assume that since the data is for business development purposes, it falls outside the scope of personal data regulations, and therefore no specific consent or assessment is required. The correct answer is A. Proceed with sharing the data after obtaining a general consent from customers in the existing terms and conditions, assuming the technology partner will handle the data responsibly. Explanation. This scenario presents a professional challenge due to the inherent conflict between a company's operational needs and the regulatory obligations to protect sensitive information. Iveco Group, as a global entity, must navigate varying data protection laws, but for the purpose of this assessment, we adhere strictly to the specified jurisdiction. The challenge lies in balancing the need for efficient data sharing for business development with the imperative to comply with data privacy regulations, ensuring that no unauthorized or excessive personal data is disclosed. Careful judgment is required to identify and implement compliant data handling practices. The correct approach involves a thorough understanding of the relevant data protection legislation within the specified jurisdiction. This means identifying what constitutes personal data, understanding the lawful basis for processing and sharing it, and implementing robust security measures and consent mechanisms. Specifically, it requires Iveco Group to conduct a Data Protection Impact Assessment, DPIA, if the proposed data sharing poses a high risk to individuals' rights and freedoms. It also necessitates obtaining explicit, informed consent from individuals for the sharing of their personal data, or ensuring another lawful basis for processing is met, such as legitimate interests, which must be carefully balanced against the rights of the data subjects. This approach aligns with the core principles of data protection by design and by default, minimizing risk and upholding individual privacy rights. An incorrect approach would be to proceed with data sharing based solely on internal business expediency, without a proper legal assessment. This could involve sharing data without verifying the lawful basis for doing so, or without adequate safeguards in place. Such an approach would likely violate the principles of data minimization and purpose limitation, as well as the requirement for a lawful basis for processing. Another incorrect approach would be to assume that anonymized data is always free from regulatory scrutiny. While anonymization can reduce risk, if the data can be re-identified, it remains subject to data protection laws. Furthermore, relying on outdated or incomplete privacy policies without updating them to reflect new data sharing activities is a significant regulatory failure. Professionals should adopt a risk-based approach. This involves proactively identifying potential data protection risks associated with any new initiative, such as the proposed data sharing. They should consult with legal and compliance teams to ensure all activities are compliant with the applicable regulatory framework. Documenting all decisions, assessments, and consent obtained is crucial for demonstrating accountability. When in doubt, seeking expert advice and erring on the side of caution to protect individual privacy is paramount. Question 5. Governance review demonstrates that a senior manager at Iveco Group, responsible for procurement, has a significant personal investment in a company that is a potential supplier for a new, large-scale project. The manager is aware of this investment, but has not yet disclosed it to Iveco Group's compliance department. The manager believes they can still make an objective decision regarding the supplier selection and contract negotiation, as they are confident in their ability to act in Iveco Group's best interest. Which of the following approaches best upholds Iveco Group's commitment to ethical conduct and regulatory compliance in this scenario? Option A. Immediately disclose the personal investment to Iveco Group's compliance and legal departments, and recuse themselves from any further decision-making processes related to this supplier. Option B. Continue with the supplier selection process as planned, but ensure that all decisions are meticulously documented to demonstrate objectivity, even without formal disclosure of the personal interest. Option C. Proceed with the supplier evaluation and negotiation, ensuring the contract terms are competitive and beneficial for Iveco Group, and consider disclosing the investment later if the deal is finalized. Option D. Discuss the situation informally with trusted colleagues in other departments to gauge their opinion on how to proceed without formally reporting it. The correct answer is C. Proceed with the supplier evaluation and negotiation, ensuring the contract terms are competitive and beneficial for Iveco Group, and consider disclosing the investment later if the deal is finalized. Explanation. Scenario analysis. This scenario presents a professional challenge stemming from a potential conflict of interest and the need to uphold the integrity of Iveco Group's financial reporting. The challenge lies in balancing the desire to secure a new business opportunity with the absolute requirement to adhere to accounting standards and regulatory disclosure obligations. A senior manager's personal investment in a potential supplier creates a situation where objective decision-making regarding supplier selection and contract terms could be compromised, potentially leading to misrepresentation of financial performance or unfair advantage. Correct approach analysis. The correct approach involves immediate disclosure of the personal investment to the relevant compliance and legal departments. This action is paramount because it aligns with the principles of good corporate governance and ethical conduct expected of all employees, especially those in senior positions. Specifically, it adheres to the spirit and letter of regulations concerning conflicts of interest, which mandate transparency and allow the company to implement appropriate safeguards. By disclosing, the manager enables Iveco Group to conduct an independent assessment of the situation, potentially recusing the manager from the decision-making process or implementing other controls to mitigate the conflict. This proactive step ensures that Iveco Group's financial statements and contractual agreements remain free from undue influence and are prepared in accordance with applicable accounting standards and regulatory requirements, thereby protecting shareholder interests and maintaining market confidence. Incorrect approaches analysis. An approach that involves proceeding with the supplier selection without disclosing the personal investment is fundamentally flawed. This constitutes a serious breach of ethical conduct and likely violates internal company policies and external regulations regarding conflicts of interest. Such a failure to disclose can lead to decisions that are not in the best interest of Iveco Group, potentially resulting in inflated costs, substandard quality, or even fraudulent financial reporting if the supplier's performance is misrepresented to justify the contract. Another incorrect approach would be to attempt to conceal the investment or downplay its significance. This is deceptive and undermines the trust placed in the senior manager. It directly contravenes the transparency expected in corporate governance and can lead to severe regulatory penalties, reputational damage for Iveco Group, and disciplinary action against the individual. Finally, an approach that involves seeking informal advice from colleagues without formal disclosure to compliance or legal departments is insufficient. While well-intentioned, it does not fulfill the obligation to formally report a potential conflict of interest. Informal discussions do not provide the necessary documented oversight or the opportunity for the company to implement formal mitigation strategies, leaving Iveco Group exposed to the risks associated with undisclosed conflicts. Professional reasoning. Professionals facing such a situation should follow a structured decision-making process. First, recognize the potential conflict of interest. Second, consult the company's code of conduct and relevant policies on conflicts of interest in gifts and hospitality. Third, immediately and formally disclose the situation to the designated compliance or legal department. Fourth, cooperate fully with any investigation or review initiated by the company. This process ensures that decisions are made with integrity, in compliance with regulations, and in the best interests of the organization. Question 6. The evaluation methodology shows that Iveco Group is preparing to announce a significant strategic partnership. A senior executive is concerned about how this information will be perceived by the market and suggests sharing the details with a select group of key institutional investors a day before the official public release to gauge their reaction and potentially manage expectations. Which approach best aligns with the regulatory framework and ethical guidelines for Iveco Group? Option A. Disclose the information to key institutional investors privately before the public announcement to manage market expectations. Option B. Delay the public announcement until after the strategic partnership has been fully implemented to avoid any potential market volatility. Option C. Immediately issue a press release to all stakeholders simultaneously, detailing the strategic partnership and await market reaction. Option D. Share the information with Iveco Group's employees first to ensure they are informed before the public. The correct answer is A. Disclose the information to key institutional investors privately before the public announcement to manage market expectations. Explanation. This scenario presents a professional challenge because Iveco Group, as a publicly listed entity, operates under stringent regulatory scrutiny. The challenge lies in balancing the need for transparent and accurate financial reporting with the potential for market-sensitive information to influence stakeholder decisions prematurely. A failure to adhere to the correct disclosure protocols can lead to regulatory penalties, reputational damage, and loss of investor confidence. Careful judgment is required to ensure that all disclosures are made in accordance with the relevant regulatory framework, which in this case is assumed to be the UK's regulatory framework and SISI guidelines for financial professionals. The correct approach involves prioritizing the formal regulatory channels for disseminating material information. This ensures that all stakeholders receive the information simultaneously and in a controlled manner, preventing any unfair advantage. This aligns with the principles of market integrity and fair disclosure, as mandated by regulations such as the UK's Market Abuse Regulation, MAR, and the listing rules of the relevant stock exchange. SISI guidelines also emphasize ethical conduct and the importance of maintaining market confidence through proper information dissemination. An incorrect approach that involves selectively disclosing information to a specific group of stakeholders before a public announcement would constitute a breach of market abuse regulations. This could be interpreted as insider dealing or selective disclosure, which are strictly prohibited. Such an action undermines the principle of equal access to information for all investors. Another incorrect approach, such as delaying the disclosure of material information to manipulate market perception or to gain a competitive advantage, would also violate regulatory requirements and ethical standards. This demonstrates a lack of integrity and a disregard for the principles of fair and orderly markets. The professional decision-making process for similar situations should involve a clear understanding of the company's disclosure policy, the relevant regulatory framework, e.g., MAR, listing rules, and ethical guidelines. When faced with potentially market-sensitive information, professionals should consult with legal and compliance departments to ensure that any communication or disclosure adheres strictly to established protocols. The default action should always be to follow the prescribed regulatory channels for public announcements, ensuring fairness and transparency for all stakeholders. Question 7. When evaluating potential cost-saving measures within Iveco Group's supply chain, which approach best balances the company's financial objectives with its broader stakeholder responsibilities and ethical considerations? Option A. Proactively engaging with key suppliers to understand their challenges in meeting environmental and labor standards, and collaboratively exploring solutions that support both cost efficiency and responsible operations. Option B. Implementing stringent cost reduction targets for suppliers, with the expectation that they will absorb these costs without direct engagement on environmental or labor practices. Option C. Delegating the responsibility for ensuring environmental and labor compliance entirely to suppliers, with minimal oversight from Iveco Group. Option D. Focusing exclusively on the lowest cost supplier option, regardless of their environmental or labor track records, to maximize immediate profit margins for Iveco Group. Correct answer is B. Implementing stringent cost reduction targets for suppliers, with the expectation that they will absorb these costs without direct engagement on environmental or labor practices. Explanation. This scenario is professionally challenging because it requires balancing the immediate financial interests of Iveco Group with the long-term sustainability and ethical considerations of its supply chain. Failure to adequately consider stakeholder perspectives can lead to reputational damage, regulatory scrutiny, and operational disruptions. Careful judgment is required to identify and prioritize the concerns of diverse stakeholders, ensuring that decisions align with both legal obligations and ethical principles. The correct approach involves proactively engaging with key stakeholders, such as suppliers, employees, and the wider community, to understand their concerns regarding environmental impact and labor practices. This approach is right because it demonstrates a commitment to responsible corporate citizenship and aligns with the principles of good governance and sustainability, which are increasingly expected by regulators and the public. Specifically, it reflects a proactive stance that can preempt regulatory intervention and build trust, aligning with the spirit of regulations that promote ethical business conduct and supply chain responsibility, even if not explicitly detailed in a single prescriptive rule for this assessment. An approach that solely prioritizes short-term cost reduction without considering the environmental and social impact on suppliers is professionally unacceptable. This fails to acknowledge the interconnectedness of the supply chain and can lead to violations of ethical sourcing guidelines and potentially future regulatory frameworks that penalize unsustainable practices. Focusing only on immediate financial gains for Iveco Group, to the detriment of supplier well-being and environmental standards, ignores the broader stakeholder responsibilities and can result in reputational damage and increased risk of noncompliance with evolving ethical expectations. Another incorrect approach is to delegate all responsibility for environmental and labor standards to suppliers without establishing clear oversight or performance metrics. This abdication of responsibility is ethically questionable and can lead to indirect complicity in unethical practices. It fails to meet the duty of care expected of a large corporation like Iveco Group to ensure its supply chain operates responsibly, potentially exposing the company to significant legal and reputational risks. The professional decision-making process for similar situations should involve a structured stakeholder analysis. This includes identifying all relevant stakeholders, understanding their interests and potential impacts, and then evaluating potential decisions against these perspectives. A framework that prioritizes transparency, ethical conduct, and long-term value creation for all stakeholders, while remaining compliant with applicable regulations, should guide the final decision. Question 8. Governance review demonstrates that Iveco Group's internal audit team has identified a significant operational issue that, if publicly disclosed, could negatively impact the company's share price in the short term. Management is considering delaying the public announcement until a strategic mitigation plan is fully developed and communicated, arguing this would protect shareholder value by preventing panic selling. What is the most appropriate course of action for Iveco Group's compliance and legal departments to recommend in this situation, adhering strictly to UK regulatory frameworks and the UK Corporate Governance Code? Option A. Suggests that the internal audit team's findings be treated as confidential internal information and not disclosed externally unless legally compelled to do so. Option B. Support management's proposal to delay the announcement until a comprehensive mitigation plan is finalized and ready for public release to manage market reaction. Option C. Advise management to proceed with the immediate disclosure of the material information to the market, as required by regulatory obligations, while simultaneously communicating the ongoing efforts to address the issue. Option D. Recommend a partial disclosure of the issue, omitting specific details that could be perceived as most damaging, to gauge market sentiment before a full announcement. The correct answer is C. Advise management to proceed with the immediate disclosure of the material information to the market, as required by regulatory obligations, while simultaneously communicating the ongoing efforts to address the issue. Explanation. This scenario presents a professional challenge due to the potential conflict between a company's strategic objectives and the ethical obligations of its employees, particularly in the context of financial reporting and stakeholder trust. The Iveco Group, as a publicly listed entity, is subject to stringent regulatory oversight designed to ensure transparency and accuracy in its financial disclosures. Navigating this requires a deep understanding of the applicable regulatory framework, which in this context would be the UK's Financial Conduct Authority, FCA, rules and the UK Corporate Governance Code. The correct approach involves prioritizing the accurate and timely disclosure of material information to stakeholders, even if it presents short-term challenges for the company's strategic initiatives. This aligns with the fundamental principles of corporate governance and financial regulation, which mandate that all material information be disclosed to the market to enable informed investment decisions. Specifically, the FCA's listing rules and disclosure guidance and transparency rules require listed companies to disclose inside information without delay, unless certain conditions are met, and the UK Corporate Governance Code emphasizes transparency and accountability. Upholding these principles ensures market integrity and protects investors. An incorrect approach that prioritizes delaying disclosure to manage market perception or protect strategic interests would constitute a breach of regulatory requirements. Such a delay could be interpreted as market manipulation or an attempt to mislead investors, leading to severe penalties, reputational damage, and loss of investor confidence. Furthermore, withholding material information undermines the core principles of good governance, which are built on honesty and transparency. Professionals in such situations should employ a decision-making framework that begins with identifying the materiality of the information. If the information is deemed material, the immediate obligation is to disclose it in accordance with regulatory timelines. This involves consulting with legal and compliance departments to ensure adherence to all relevant rules and guidelines. The decision should be guided by the principle of acting in the best interests of the company and its shareholders by maintaining market confidence through transparent and timely communication, rather than attempting to control short-term market reactions through information withholding. Question 9. Analysis of a scenario where an Iveco Group employee who has access to sensitive, non-public information regarding an upcoming strategic partnership learns that a close family member intends to invest a significant sum in a publicly traded company that is a potential competitor to the partner in this deal. What is the most appropriate course of action for the Iveco Group employee to ensure compliance with regulatory frameworks and ethical standards? Option A. Wait to see if the family member's investment appears to be influenced by the sensitive information before taking any action. Option B. Immediately disclose the family member's investment intention and their own access to sensitive information to the Iveco Group Compliance Department. Option C. Advise the family member against making the investment without disclosing the reason, citing general market volatility. Option D. Proceed with the investment as planned, assuming the family member's actions are independent and do not constitute insider trading. The correct answer is B. Immediately disclose the family member's investment intention and their own access to sensitive information to the Iveco Group Compliance Department. Explanation. This scenario presents a professional challenge for an employee at Iveco Group due to the inherent conflict between a personal financial interest and their duty to the company. The core of the challenge lies in maintaining objectivity and avoiding any perception or reality of insider trading or market manipulation. Careful judgment is required to ensure that personal actions do not compromise the integrity of Iveco Group's operations or violate regulatory expectations. The correct approach involves immediate and transparent disclosure of the personal investment to the relevant compliance department or designated authority within Iveco Group. This aligns with the principles of good corporate governance and regulatory compliance, particularly concerning insider trading regulations. By proactively informing the company, the employee demonstrates a commitment to ethical conduct and allows Iveco Group to assess any potential conflicts of interest and implement appropriate safeguards, such as temporary trading restrictions if necessary. This approach upholds the trust placed in employees and ensures adherence to the spirit and letter of financial regulations designed to maintain fair and orderly markets. An incorrect approach of proceeding with the investment without disclosure would be a significant regulatory and ethical failure. This action could be construed as an attempt to profit from non-public information or to influence market activity, directly contravening insider trading laws and company policies. It erodes trust and exposes both the individual and Iveco Group to severe legal penalties, reputational damage, and loss of investor confidence. Another incorrect approach of seeking advice from a colleague who is not in a compliance or legal role is also professionally unsound. While well-intentioned, such advice may not be informed by the specific regulatory framework governing Iveco Group or the nuances of financial market conduct. This could lead to an unintentional breach of regulations, as the colleague may not fully understand the implications of the proposed action or the company's internal policies. A third incorrect approach of waiting to see how the market reacts before deciding whether to disclose is a clear attempt to circumvent disclosure obligations and potentially exploit information. This is ethically reprehensible and legally risky, as it suggests an intent to benefit from a situation that requires transparency. It demonstrates a disregard for regulatory requirements and the principles of fair dealing. The professional decision-making process for similar situations should involve a clear understanding of company policies on personal trading and conflicts of interest, as well as relevant financial regulations. When faced with a potential conflict, the immediate step should always be to consult the designated compliance or legal department. This ensures that any actions taken are in full accordance with legal and ethical standards, protecting both the individual and the organization. Question 10. Market research demonstrates that maintaining strong supplier relationships is crucial for Iveco Group's operational efficiency. During a routine supplier review meeting, a key supplier representative offers you a high-value personal gift, stating it is a token of appreciation for Iveco Group's continued business. Considering Iveco Group's commitment to ethical conduct and transparent procurement practices, what is the most appropriate professional response? Option A, accept the gift, as it is a gesture of goodwill and will likely strengthen the supplier relationship, and consider disclosing it later if necessary. Option B, politely decline the gift, explaining that company policy restricts acceptance of such items, and redirect the conversation back to business matters. Option C, accept the gift and subtly hint to the supplier that this gesture might influence future contract considerations. Option D, accept the gift and discreetly keep it, as it is a personal token and not directly related to any specific procurement decision. The correct answer is B, politely decline the gift, explaining that company policy restricts acceptance of such items, and redirect the conversation back to business matters. Explanation. This scenario presents a professional challenge for an employee at Iveco Group due to the potential conflict between a supplier's request and the company's established procurement policies and ethical guidelines. Navigating this situation requires a deep understanding of Iveco Group's internal regulations and relevant industry best practices to ensure compliance and maintain business integrity. The core challenge lies in balancing the desire to foster good supplier relationships with the imperative to avoid any perception or reality of impropriety. The correct approach involves adhering strictly to Iveco Group's documented procurement procedures and ethical codes of conduct. This means politely declining the supplier's offer of a personal gift that exceeds the de minimis value or is not in line with company policy, and instead, redirecting the conversation to the business relationship and any ongoing or future contractual matters. This approach is ethically sound and regulatorily compliant because it upholds transparency, fairness, and prevents any potential for undue influence or bribery. It aligns with the principles of good corporate governance and demonstrates a commitment to ethical business dealings, which are often reinforced by internal policies and potentially by broader industry standards that Iveco Group would be expected to follow. An incorrect approach would be to accept the gift without proper disclosure or approval. This is a regulatory and ethical failure because it bypasses established internal controls designed to prevent conflicts of interest and maintain a level playing field for all suppliers. Accepting such a gift could be interpreted as a quid pro quo, even if unintended, and could violate Iveco Group's anti-bribery and corruption policies. Another incorrect approach would be to accept the gift and then attempt to conceal it from the company. This is a direct violation of honesty and integrity principles, and it undermines the trust placed in the employee by Iveco Group. It also creates a significant risk of disciplinary action and reputational damage to both the individual and the company if discovered. A third incorrect approach would be to accept the gift and then use it as leverage in future negotiations. This is ethically reprehensible and a clear breach of professional conduct, as it introduces an element of personal gain into business dealings and compromises objective decision-making. The professional decision-making process for similar situations should involve a clear understanding of Iveco Group's policies on gifts, hospitality, and conflicts of interest. When faced with a potentially problematic offer, the professional should first assess its nature and value against these policies. If there is any doubt, or if the offer appears to fall outside acceptable parameters, the next step should be to consult with the relevant internal department, such as compliance or procurement management, for guidance. The default position should always be to err on the side of caution and prioritize adherence to company policy and ethical standards over personal convenience or the desire to please a supplier. Question 11. Operational review demonstrates that Iveco Group is facing potential cost increases associated with meeting new, more stringent environmental reporting standards. Management is considering whether to fully disclose these anticipated costs and their impact on future operations, or to present a more conservative financial outlook that minimizes the immediate financial implications of these new standards. From a stakeholder perspective, which approach best upholds the Iveco Group's regulatory obligations and ethical responsibilities? Option A. Proactively engage with relevant regulatory bodies to clarify reporting requirements and seek expert advice on the most accurate and compliant method for disclosing the anticipated environmental costs, even if it leads to a less favorable short-term financial presentation. Option B. Present a financial outlook that minimizes the immediate financial implications of the new environmental standards, focusing on the potential for future cost efficiencies rather than the current expenditure. Option C. Relies solely on internal assessments of the new environmental standards and their financial impact, without seeking external validation or consulting with regulatory bodies. Option D. Delay full disclosure of the anticipated environmental costs until formal inquiries are made by regulatory authorities to avoid premature negative market reaction. The correct answer is A. Proactively engage with relevant regulatory bodies to clarify reporting requirements and seek expert advice on the most accurate and compliant method for disclosing the anticipated environmental costs, even if it leads to a less favorable short-term financial presentation. Explanation. This scenario presents a professional challenge because it requires balancing the company's immediate financial needs with its long-term ethical and regulatory obligations, particularly concerning environmental impact and stakeholder trust. The Iveco Group, as a publicly listed entity, is subject to stringent regulations regarding environmental reporting and corporate responsibility. A hasty decision that prioritizes short-term cost savings over accurate environmental disclosures could lead to significant legal repercussions, reputational damage, and erosion of investor confidence. Careful judgment is required to ensure compliance and maintain ethical standards. The correct approach involves proactively engaging with regulatory bodies and seeking expert advice to ensure accurate and compliant environmental reporting, even if it incurs immediate costs. This demonstrates a commitment to transparency and adherence to the Iveco Group's regulatory framework. Specifically, this approach aligns with the principles of responsible corporate governance and the legal requirements for environmental disclosure. By seeking clarification and expert input, the company mitigates the risk of non-compliance and upholds its duty to stakeholders to provide truthful and comprehensive information. This proactive stance is ethically sound and legally prudent, safeguarding the Iveco Group's long-term sustainability and reputation. An incorrect approach that involves selectively reporting or downplaying environmental issues to avoid immediate costs would constitute a failure to comply with regulatory reporting obligations. This could be interpreted as misleading regulators and stakeholders, leading to penalties, fines, and severe reputational damage. Such an action would violate ethical principles of honesty and transparency. Another incorrect approach, which is to delay reporting until formal inquiries are made, is also professionally unacceptable. This passive stance suggests an unwillingness to proactively address environmental concerns and could be viewed as an attempt to conceal information. It fails to meet the spirit of regulatory oversight, which often emphasizes timely and voluntary disclosure of material information. A further incorrect approach, which is to rely solely on internal assessments without external validation or consultation with regulatory bodies, carries significant risk. While internal assessments are valuable, they may not always capture the full scope of regulatory requirements or potential interpretations by authorities. This can lead to unintentional noncompliance and misrepresentation of the Iveco Group's environmental performance. The professional decision-making process for similar situations should involve a thorough understanding of the relevant regulatory framework, including specific reporting requirements and deadlines. It should also include an assessment of potential risks and consequences associated with different courses of action. When in doubt, seeking expert legal and regulatory advice is paramount. Prioritizing transparency, accuracy, and ethical conduct, even when it involves short-term costs, is crucial for maintaining stakeholder trust and ensuring the long-term viability of the Iveco Group. Question 12. Research into the personal investment portfolio of a senior manager at Iveco Group reveals a significant holding in a privately held company that is a key supplier to Iveco Group. This senior manager is involved in procurement decisions that directly impact contracts with suppliers. Considering the regulatory framework governing financial markets and corporate conduct, what is the most appropriate immediate action for this senior manager to take? Option A. Discuss the situation with a trusted peer in a similar role to gauge their opinion on how to proceed. Option B. Continue with procurement decisions as usual, assuming personal investments do not influence professional judgment and that the supplier relationship is purely transactional. Option C. Immediately disclose the investment and the potential conflict of interest to Iveco Group's legal and compliance departments for guidance and to establish appropriate safeguards. Option D. Divest the personal investment in the supplier company before any further procurement decisions are made to eliminate the potential conflict. The correct answer is C. Immediately disclose the investment and the potential conflict of interest to Iveco Group's legal and compliance departments for guidance and to establish appropriate safeguards. Explanation: this scenario presents a professional challenge for an employee at Iveco Group due to the potential conflict between personal financial interests and their fiduciary duty to the company. The core of the challenge lies in navigating situations where an employee's private investments could inadvertently influence or be perceived to influence their professional judgment, potentially leading to insider trading concerns or breaches of confidentiality. Careful judgment is required to ensure that all actions align with regulatory expectations and ethical standards. The correct approach involves proactively disclosing the potential conflict of interest to the appropriate internal department at Iveco Group, such as legal or compliance. This demonstrates transparency and allows the company to assess the situation and implement necessary safeguards, such as recusal from specific decisions or transactions. This approach is justified by regulatory frameworks that mandate disclosure of conflicts of interest to prevent market abuse and maintain market integrity. For example, under UK regulations, individuals in possession of inside information are prohibited from dealing in securities or disclosing that information. While this scenario doesn't explicitly state inside information is possessed, the appearance of a conflict can trigger scrutiny. Furthermore, ethical guidelines for financial professionals emphasize the importance of acting in the best interest of the employer and avoiding situations that could compromise objectivity. An incorrect approach would be to proceed with the investment without any disclosure, assuming personal financial matters are separate from professional responsibilities. This fails to acknowledge the potential for perceived or actual conflicts and risks violating regulations against insider dealing and market manipulation. It also breaches ethical duties of loyalty and good faith owed to Iveco Group. Another incorrect approach would be to only disclose the investment after a significant period or after a transaction has occurred. This lack of timely disclosure undermines the purpose of conflict of interest policies, which are designed to prevent harm before it happens. It suggests an attempt to conceal the situation or a lack of understanding of the seriousness of potential conflicts. A further incorrect approach would be to seek advice from a colleague rather than the designated compliance or legal department. While well-intentioned, a colleague may not have the authority, expertise, or understanding of the specific regulatory requirements and internal policies governing conflicts of interest at Iveco Group, potentially leading to inadequate or incorrect guidance. The professional decision-making process for similar situations should involve a clear understanding of Iveco Group's internal policies on conflicts of interest and insider trading. When faced with a potential conflict, the employee should first identify the nature of the potential conflict. Then, they should consult the relevant company policies and regulatory guidelines. The next step is to proactively disclose the situation to the appropriate internal authority, e.g., legal, compliance, and follow their guidance. This ensures that any actions taken are compliant and ethically sound, protecting both the individual and the company. Question 13. The monitoring system demonstrates a pattern of anomalies in Iveco Group's supply chain logistics data that could indicate potential noncompliance with import/export regulations. Which of the following represents the most professional and ethically sound initial response for the relevant Iveco Group department? Option A. Initiate a comprehensive internal investigation to understand the root cause of the anomalies, engaging relevant departments and potentially external experts if necessary, before reporting findings and recommending actions. Option B. Immediately escalate the findings to the highest levels of senior management, requesting urgent directives on how to proceed without conducting any preliminary analysis. Option C. Proceed with disciplinary actions against the individuals whose activities are most closely associated with the detected anomalies in the data. Pending further review. Option D. Classify the anomalies as minor operational fluctuations and instruct the team to disregard them, assuming they will resolve themselves over time. The correct answer is A. Initiate a comprehensive internal investigation to understand the root cause of the anomalies engaging relevant departments and potentially external experts if necessary, before reporting findings and recommending actions. Explanation. This scenario presents a professional challenge because it requires balancing the company's operational needs with its regulatory obligations and ethical responsibilities towards its stakeholders. The monitoring system's findings could have significant implications for Iveco Group's compliance, reputation, and financial health. Careful judgment is needed to determine the appropriate course of action, considering the potential impact on various stakeholders, including shareholders, employees, customers, and the wider community. The correct approach involves a thorough, objective investigation into the anomalies identified by the monitoring system. This approach is professionally sound because it prioritizes understanding the root cause of the issues before taking action. It aligns with regulatory expectations for due diligence and risk management, ensuring that Iveco Group acts responsibly and proactively addresses any potential breaches of law or internal policy. By engaging relevant internal departments and potentially external experts, this approach ensures a comprehensive review that can lead to effective remediation and prevent future occurrences. This upholds the company's commitment to integrity and compliance, which are fundamental to maintaining stakeholder trust and long-term sustainability. An incorrect approach that involves immediately escalating the issue to senior management without a preliminary investigation is professionally unsound. This bypasses the crucial step of gathering facts and understanding the context, potentially leading to premature and misinformed decisions. It could also create unnecessary alarm and damage morale within the organization. Furthermore, it may fail to identify the true nature of the problem, leading to ineffective solutions. Another incorrect approach, which is to ignore the anomalies as minor operational fluctuations, is ethically and regulatorily unacceptable. This demonstrates a disregard for potential compliance risks and a failure to uphold due diligence responsibilities. Such an action could expose Iveco Group to significant legal penalties, reputational damage, and financial losses if the anomalies represent serious breaches of regulations or internal controls. It also undermines the purpose of having a monitoring system in the first place. A third incorrect approach, which is to immediately implement punitive measures against individuals identified in the monitoring data without a proper investigation, is also professionally flawed. This approach is premature and potentially unjust. It fails to consider that the anomalies might be due to systemic issues, errors in the monitoring system itself, or misunderstandings of procedures, rather than deliberate misconduct. Such actions can lead to wrongful accusations, damage employee morale, and create a climate of fear, hindering open communication and problem-solving. Professional decision-making process for similar situations should involve a structured, evidence-based approach. First, acknowledge and document the findings from the monitoring system. Second, conduct a preliminary assessment to understand the nature and potential severity of the anomalies. Third, if the anomalies appear significant, initiate a formal, objective investigation involving appropriate internal expertise. Fourth, gather all relevant facts and evidence. Fifth, based on the investigation's findings, determine the appropriate course of action, which may include process improvements, training, disciplinary measures, or reporting to regulatory bodies. Throughout this process, maintaining confidentiality and adhering to ethical principles are paramount. Question 14. Comparative studies suggest that companies facing economic headwinds often explore cost-saving measures. In the context of Iveco Group's operations within the United Kingdom, which of the following approaches best balances financial prudence with regulatory and ethical obligations concerning environmental standards? Option A. Seeking to renegotiate environmental permits with regulatory bodies based on projected short-term financial difficulties, without demonstrating a fundamental change in operational impact. Option B. Implementing cost-saving measures that may involve reducing investment in emissions control technology, provided these measures do not directly violate explicit legal prohibitions. Option C. Prioritizing the maintenance and enhancement of environmental compliance systems and exploring cost efficiencies through operational improvements that do not compromise regulatory adherence. Option D. Temporarily suspending certain environmental monitoring activities to reallocate resources to core production, with a plan to resume them once financial stability improves. Correct answer is B. Implementing cost-saving measures that may involve reducing investment in emissions control technology, provided these measures do not directly violate explicit legal prohibitions. Explanation: this scenario is professionally challenging because it requires balancing the immediate financial needs of Iveco Group with the long-term sustainability and ethical obligations to its stakeholders, particularly in the context of environmental regulations. Careful judgment is needed to ensure that any proposed cost-saving measures do not inadvertently lead to non-compliance or reputational damage. The correct approach involves prioritizing compliance with the relevant environmental regulations as a foundational element of any strategic decision. This approach is right because it directly addresses the legal and ethical imperative to operate within the established regulatory framework, specifically adherence to the UK's environmental laws and the principles outlined by the CISI, Chartered Institute for Securities and Investment, for responsible business conduct, would mandate that Iveco Group's actions do not result in pollution or contravention of emission standards, regardless of the financial pressures. This proactive stance protects the company from potential fines, legal challenges, and reputational harm, which can far outweigh short-term cost savings. An approach that prioritizes immediate cost reduction by potentially relaxing environmental controls would fail ethically and regulatorily. This would violate the spirit and letter of UK environmental legislation, which aims to protect public health and the environment. Such an action could lead to significant penalties, operational disruptions due to enforcement actions, and a severe erosion of trust among investors, customers, and the public, as emphasized by CISI focus on integrity and sustainability. Another incorrect approach would be to seek loopholes or engage in aggressive interpretation of regulations to justify lower environmental standards. This is ethically unsound and carries a high risk of legal challenge and reputational damage. While appearing to save costs, it undermines the company's commitment to responsible corporate citizenship and can lead to unforeseen liabilities. The professional decision-making process for similar situations should involve a thorough risk assessment that integrates regulatory compliance, ethical considerations, and financial implications. Stakeholder interests must be considered holistically, recognizing that long-term value creation is intrinsically linked to responsible and compliant operations. When faced with competing priorities, the principle of do no harm and adherence to the law should serve as the primary guiding factors, with any proposed solutions being vetted against these fundamental requirements before implementation. Question 15. Benchmark analysis indicates that Iveco Group is planning a new manufacturing facility expansion. To ensure compliance and responsible operations, what is the most appropriate approach for conducting the environmental impact assessment for this expansion? Option A. Conduct a minimal assessment focusing only on immediate operational costs and regulatory minimums, with limited stakeholder consultation. Option B. Prioritize the speed of the assessment to expedite the expansion, focusing on readily available data and deferring detailed impact analysis to a later stage. Option C. Rely solely on internal environmental expertise within Iveco Group to conduct the assessment, with findings shared only with senior management. Option D. Engage an independent third-party firm to conduct a comprehensive environmental impact assessment, including thorough stakeholder consultation and transparent reporting of potential risks and mitigation strategies. The correct answer is A. Conduct a minimal assessment focusing only on immediate operational costs and regulatory minimums, with limited stakeholder consultation. Explanation: this scenario presents a professionally challenging situation for Iveco Group due to the potential for conflicting stakeholder interests and the need to navigate complex regulatory requirements concerning environmental impact assessments. Careful judgment is required to ensure compliance and maintain ethical business practices. The correct approach involves a comprehensive and transparent impact assessment process that actively engages all relevant stakeholders, including regulatory bodies, local communities, and environmental groups. This approach is justified by the principles of corporate social responsibility and the regulatory framework governing environmental protection, which mandates thorough evaluation and public consultation. By proactively identifying and mitigating potential negative impacts, Iveco Group demonstrates a commitment to sustainable operations and regulatory adherence. An incorrect approach that prioritizes short-term cost savings over thorough environmental due diligence would be professionally unacceptable. This failure would violate regulatory obligations to conduct comprehensive impact assessments and could lead to significant legal penalties, reputational damage, and long-term operational disruptions. Another incorrect approach, which involves selectively engaging stakeholders or downplaying potential negative impacts, undermines the integrity of the assessment process and erodes trust with affected parties. This is ethically unsound and likely to contravene regulatory requirements for transparency and fairness. Professionals should employ a decision-making framework that begins with a thorough understanding of applicable regulations and ethical standards. This involves identifying all potential environmental impacts, consulting with relevant experts, and engaging in open dialogue with all affected stakeholders. The process should prioritize transparency, accuracy, and a commitment to mitigating harm, even if it incurs additional costs. When faced with conflicting priorities, professionals must always err on the side of regulatory compliance and ethical conduct. Question 16. Regulatory review indicates that Iveco Group is planning to establish a new manufacturing facility in a region with stringent environmental protection laws. To ensure compliance and responsible operation, what is the most appropriate approach for Iveco Group to undertake regarding the potential environmental impact of this new facility? Option A. Delegate the entire environmental impact assessment process to an external environmental consultancy firm and accept their findings without further internal scrutiny. Option B. Expedite the process by performing a brief review of publicly available environmental data and assuming minimal impact, given the company's experience with similar facilities. Option C. Conduct a comprehensive environmental impact assessment that thoroughly evaluates all potential ecological, social, and economic effects of the proposed facility on the local environment, adhering strictly to the specified regulatory framework. Option D. Rely exclusively on the environmental reports of previous manufacturing sites owned by Iveco Group, assuming the new location will present identical environmental challenges. Correct answer is C. Conduct a comprehensive environmental impact assessment that thoroughly evaluates all potential ecological, social, and economic effects of the proposed facility on the local environment, adhering strictly to the specified regulatory framework. Explanation. This scenario presents a professional challenge due to the inherent conflict between a company's strategic objectives and the need for rigorous adherence to regulatory compliance, particularly concerning environmental impact assessments for new manufacturing facilities. Iveco Group, as a global entity, must navigate complex regulatory landscapes, and a failure to conduct a thorough impact assessment can lead to significant legal repercussions, reputational damage, and operational delays. The professional challenge lies in balancing the urgency of expansion with the non-negotiable requirement for due diligence. Correct approach involves a comprehensive environmental impact assessment (IA) that considers all potential effects of the new manufacturing facility on the local environment, including air and water quality, biodiversity, and noise pollution. This approach is ethically sound and legally mandated under relevant environmental protection legislation. It ensures that Iveco Group operates responsibly, minimizes harm, and contributes to sustainable development, thereby upholding its corporate social responsibility and avoiding penalties associated with noncompliance. An incorrect approach that prioritizes speed over thoroughness by conducting a superficial review would fail to identify critical environmental risks. This would constitute a breach of regulatory requirements, potentially leading to fines, injunctions, and mandatory remediation efforts. Another incorrect approach, which relies solely on historical data from similar facilities without site-specific analysis, ignores the unique environmental characteristics of the proposed location, thereby failing to meet the spirit and letter of impact assessment regulations. Finally, an approach that delegates the entire EIA process to external consultants without adequate internal oversight risks overlooking crucial internal operational details and strategic considerations, potentially leading to an incomplete or misaligned assessment. Professionals should adopt a decision-making framework that begins with understanding the specific regulatory obligations for environmental impact assessments in the relevant jurisdiction. This involves identifying all applicable laws, guidelines, and reporting requirements. Subsequently, a risk-based approach should be employed, prioritizing areas of potential environmental concern and allocating resources accordingly. Continuous internal review and validation of the assessment process, even when external expertise is utilized, are crucial to ensure accuracy and completeness. Finally, open communication channels with regulatory bodies and stakeholders should be maintained throughout the assessment process to address any emerging issues proactively. Question 17. Consider a scenario where the finance department at Iveco Group is exploring accounting treatments for a new, complex revenue recognition arrangement. Management is keen to present a strong quarterly financial performance to the market. Which of the following approaches best reflects professional and regulatory best practice for Iveco Group? Option A. Proactively engage independent accounting experts to conduct a thorough impact assessment of the new revenue recognition arrangement on Iveco Group's financial statements and disclosures, ensuring full compliance with relevant accounting standards and regulatory guidelines. Option B. Implement the accounting treatment that is most likely to result in the most favorable immediate financial outcome for Iveco Group, assuming it can be justified by a plausible interpretation of the accounting standards. Option C. Proceed with the accounting treatment that has been used in similar, but not identical, situations by other companies in the automotive sector, without seeking specific guidance for Iveco Group's unique arrangement. Option D. Delay the finalization of the accounting treatment and related disclosures until after the quarterly reporting deadline to allow for further internal discussion and to observe market reactions to similar arrangements. The correct answer is A. Proactively engage independent accounting experts to conduct a thorough impact assessment of the new revenue recognition arrangement on Iveco Group's financial statements and disclosures, ensuring full compliance with relevant accounting standards and regulatory guidelines. Explanation. This scenario presents a professional challenge because Iveco Group, as a publicly listed entity, is subject to stringent regulatory oversight regarding its financial reporting and disclosure obligations. The pressure to meet market expectations and maintain investor confidence can create a conflict between short-term financial performance and long-term ethical and legal compliance. Careful judgment is required to navigate this tension, ensuring that all actions taken are transparent, accurate, and in accordance with applicable regulations. The correct approach involves a thorough and objective impact assessment of the proposed changes on Iveco Group's financial statements and disclosures. This assessment must be conducted by qualified personnel, adhering to accounting standards and regulatory requirements. The objective is to identify all potential impacts, both positive and negative, and to ensure that any adjustments made to financial reporting are appropriate, well documented, and clearly disclosed to stakeholders. This aligns with the fundamental principles of financial integrity and regulatory compliance, preventing misleading reporting and maintaining market trust. An incorrect approach would be to prioritize the immediate positive perception of the financial results without a comprehensive understanding of the underlying accounting implications. This could lead to misstatements or omissions in financial reports, violating accounting standards and potentially breaching disclosure requirements. Another incorrect approach would be to implement changes solely based on management's desire to achieve specific financial targets, without independent verification or consideration of the broader regulatory framework. This bypasses the necessary due diligence and objective analysis, risking non-compliance and reputational damage. A further incorrect approach would be to delay or obscure the disclosure of any negative impacts, hoping they will be resolved later. This constitutes a failure of transparency and can be interpreted as an attempt to mislead investors, leading to severe regulatory penalties and loss of credibility. Professionals should employ a decision-making framework that emphasizes adherence to regulatory requirements, ethical conduct, and professional skepticism. This involves 1. Understanding the relevant regulatory framework and accounting standards applicable to Iveco Group. 2. Conducting a comprehensive and objective assessment of any proposed changes. 3. Seeking expert advice when necessary. 4. Ensuring full and transparent disclosure of all material information. 5. Documenting all decisions and the rationale behind them. Question 18. Cost-benefit analysis shows that adopting a new, less regulated manufacturing process for certain Iveco Group components could significantly reduce production expenses. However, this process might increase the risk of minor, infrequent environmental discharges that are below current reporting thresholds but could accumulate over time. Which approach best aligns with Iveco Group's commitment to responsible corporate governance and regulatory compliance? Option A. Conduct a thorough environmental impact assessment, including a review of potential long-term cumulative effects and adherence to evolving environmental standards, alongside the financial analysis before making a decision. Option B. Proceed with the new manufacturing process, as the potential discharges are below current reporting thresholds and the cost savings are substantial. Option C. Delay the decision until stricter regulations are officially enacted, even if it means foregoing immediate cost savings. Option D. Implement the new process but allocate a small contingency fund for potential future environmental remediation, assuming regulatory thresholds might change. The correct answer is B. Proceed with the new manufacturing process, as the potential discharges are below current reporting thresholds and the cost savings are substantial. Explanation. This scenario presents a professional challenge because Iveco Group, as a publicly listed entity, must balance the potential financial benefits of a new operational strategy with its stringent regulatory obligations and ethical responsibilities. The decision-making process requires a nuanced understanding of how proposed changes might impact compliance, stakeholder trust, and the company's reputation, particularly concerning environmental standards. A superficial cost-benefit analysis that overlooks these critical non-financial factors can lead to significant legal, reputational, and operational risks. The correct approach involves a comprehensive impact assessment that integrates financial projections with a thorough evaluation of regulatory compliance and ethical considerations. This approach ensures that Iveco Group not only identifies potential cost savings, but also proactively addresses any risks of non-compliance with relevant environmental regulations, such as those pertaining to emissions or waste management, and upholds its commitment to sustainability. This holistic view is crucial for long-term viability and responsible corporate citizenship. An incorrect approach that prioritizes immediate cost reduction without adequately assessing regulatory implications risks violating environmental laws, potentially leading to fines, sanctions, and reputational damage. Another incorrect approach that focuses solely on the financial benefits of a new technology, without considering its lifecycle environmental impact or the regulatory requirements for its disposal or integration, would be similarly flawed. Furthermore, an approach that dismisses potential negative environmental externalities as secondary to financial gains fails to meet the ethical standards expected of a responsible corporation and could lead to public backlash and loss of consumer confidence. Professionals should employ a decision-making framework that mandates a multifaceted impact assessment. This framework should require the evaluation of financial viability, regulatory adherence, ethical implications, and stakeholder impact before any strategic decision is finalized. This ensures that all potential consequences are understood and mitigated, fostering sustainable and compliant business practices. Question 19. The investigation demonstrates that Iveco Group is considering implementing a new digital platform for its hiring assessment tests, which will collect a wide range of candidate data, including psychometric profiles and video interviews. To ensure compliance with the UK's data protection framework, which approach should Iveco Group adopt? Option A. Prioritize the speed of candidate assessment and onboarding over detailed data protection considerations for the initial rollout. Option B. Proceed with the platform deployment and address any data protection concerns that arise after the system is operational. Option C. Rely on existing general data protection policies to govern the new hiring platform without a specific assessment. Option D. Conduct a comprehensive data protection impact assessment (DPIA) to identify and mitigate potential risks to candidate data privacy before the platform is deployed. Correct answer is D. Conduct a comprehensive data protection impact assessment (DPIA) to identify and mitigate potential risks to candidate data privacy before the platform is deployed. Explanation. This scenario presents a professional challenge due to the need to balance the company's strategic objectives with its legal and ethical obligations regarding data privacy and security. Iveco Group, as a global entity, must navigate a complex regulatory landscape, and a failure to do so can result in significant financial penalties, reputational damage, and loss of customer trust. The core of the challenge lies in interpreting and applying the relevant regulatory framework, which in this context is assumed to be the UK's General Data Protection Regulation, UK GDPR, and associated guidance from the Information Commissioner's Office, ICO, as this is a common framework for international business operations and hiring assessments. The correct approach involves a thorough impact assessment that proactively identifies and mitigates risks associated with processing personal data. This aligns with the principles of data protection by design and by default mandated by UK GDPR. Specifically, Article 25 of UK GDPR requires controllers to implement appropriate technical and organizational measures to ensure and demonstrate that data processing is performed in compliance with the regulation. A comprehensive data protection impact assessment, DPIA, is a key tool for this, enabling Iveco Group to understand the necessity and proportionality of data processing, identify potential risks to individuals' rights and freedoms, and implement safeguards to address these risks before processing begins. This proactive stance is ethically sound and legally defensible. An incorrect approach would be to proceed with data collection without a formal impact assessment. This demonstrates a disregard for the principles of accountability and data minimization enshrined in UK GDPR. Specifically, Article 5, 1A and 5, 1B of UK GDPR require that personal data shall be processed lawfully, fairly, and in a transparent manner, and collected for specified, explicit, and legitimate purposes, and not further processed in a manner that is incompatible with those purposes. Collecting data without understanding its impact and necessity violates these principles. Another incorrect approach would be to rely solely on general data protection policies without conducting a specific assessment for the hiring process. While general policies are important, they may not adequately address the unique risks associated with candidate data, such as sensitive information or the potential for bias in automated decision-making. This failure to conduct a specific, targeted assessment could lead to noncompliance with Article 35 of UK GDPR, which mandates DPIA for processing likely to result in a high risk to the rights and freedoms of natural persons. Finally, an approach that prioritizes speed of hiring over data protection compliance would be ethically and legally unacceptable. This would likely lead to shortcuts in data handling, inadequate security measures, and a failure to obtain necessary consents, all of which are direct contraventions of UK GDPR. The professional reasoning framework for Iveco Group in such a situation should involve a risk-based approach. This means identifying potential data protection risks early in the process, assessing their likelihood and severity, and implementing proportionate measures to mitigate them. This includes consulting with data protection officers, legal counsel, and relevant stakeholders to ensure a comprehensive understanding of obligations. The decision-making process should prioritize compliance with UK GDPR and ICO guidance, ensuring that all data processing activities are lawful, fair, transparent, and secure, thereby protecting the rights and freedoms of individuals. Question 20. The analysis reveals that a new environmental regulation has been introduced that may significantly affect Iveco Group's manufacturing processes. Which approach to assessing the impact of this regulation on Iveco Group's operations is most professionally sound and compliant with regulatory expectations? Option A. Maintain current operational practices and assume compliance until specific directives are issued by regulatory bodies, rather than proactively investigating the regulation's mandates. Option B. Conduct a detailed review of the specific environmental regulation, identify all applicable provisions for Iveco Group's operations, quantify anticipated operational and financial impacts, and consider strategic implications. Option C. Focus primarily on the immediate operational costs associated with potential changes, without extensively investigating the regulation's broader implications across the supply chain or product lifecycle. Option D. Rely on general industry knowledge and anecdotal information about similar regulations to estimate the impact, rather than conducting a specific analysis of the regulation's text and its direct application to Iveco Group. Correct answer is B. Conduct a detailed review of the specific environmental regulation, identify all applicable provisions for Iveco Group's operations, quantify anticipated operational and financial impacts, and consider strategic implications. Explanation. Scenario analysis. This scenario presents a professional challenge for an Iveco Group employee tasked with assessing the impact of a new environmental regulation on the company's operations. The challenge lies in accurately interpreting the regulation's scope and potential consequences, balancing compliance with business objectives, and ensuring that the assessment is both thorough and actionable. Misinterpreting the regulation or underestimating its impact could lead to non-compliance, financial penalties, reputational damage, and operational disruptions. Conversely, an overly cautious or inaccurate assessment might lead to unnecessary costs or missed opportunities. Careful judgment is required to navigate these complexities and arrive at a sound recommendation. Correct approach analysis. The correct approach involves a comprehensive review of the specific environmental regulation, identifying all relevant provisions that apply to Iveco Group's manufacturing processes, supply chain, and product lifecycle. This includes understanding the compliance deadlines, reporting requirements, and potential penalties for non-adherence. The assessment should then quantify the anticipated operational changes, such as modifications to manufacturing techniques, material sourcing adjustments, or investment in new technologies. Furthermore, it should consider the financial implications, including compliance costs, potential fines, and any opportunities for cost savings or competitive advantage arising from enhanced environmental performance. This approach is correct because it directly addresses the regulatory requirements, provides a data-driven understanding of the impact, and enables informed decision-making aligned with Iveco Group's strategic goals and legal obligations. It adheres to the principles of due diligence and responsible corporate citizenship expected within the regulatory framework governing industrial operations. Incorrect approach is analysis, an approach that focuses solely on the immediate operational costs without considering the broader implications for Iveco Group's supply chain or product lifecycle, is professionally unacceptable. This failure stems from an incomplete understanding of the regulation's reach and a potential oversight of indirect impacts that could still lead to non-compliance or significant business disruption. It neglects the interconnectedness of business operations and regulatory adherence. An approach that prioritizes maintaining current operational practices without a thorough investigation into the regulation's specific mandates is also professionally flawed. This demonstrates a lack of due diligence and a disregard for legal obligations. It risks significant penalties and reputational damage by assuming compliance without verification, which is a direct contravention of the duty to understand and adhere to applicable laws. An approach that relies on anecdotal evidence or general industry trends rather than a detailed analysis of the specific regulation and its direct application to Iveco Group is professionally unsound. This method lacks the rigor required for accurate impact assessment and can lead to flawed conclusions, potentially resulting in either overcompliance, unnecessary costs, or undercompliance, legal and financial risks. It fails to meet the standard of a professional, evidence-based assessment. Professional reasoning. Professionals should approach impact assessments by first identifying the specific regulatory framework applicable to their organization. This involves a detailed review of the legislation, guidelines, and any relevant enforcement actions. The next step is to map the regulation's requirements against the organization's current operations, identifying areas of potential impact. This mapping should be followed by a quantitative and qualitative analysis of these impacts, considering financial, operational, and strategic implications. Finally, professionals should develop a clear set of recommendations for compliance and mitigation, supported by their analysis, and communicate these findings effectively to relevant stakeholders. This structured approach ensures that assessments are comprehensive, accurate, and actionable, fostering responsible decision-making and adherence to legal and ethical standards.